Hi, I am Joe Halpern, Chief Investment Officer of Fountainhead. Welcome to Investment Wars. At Fountainhead, we regularly incorporate debate into our analytical process. On this podcast, we seek to have meaningful, respectful conversations on major themes within the economy and markets. Will globalization end? Will China pass the US in overall GDP? Will robots take over the world? This is our effort to better understand the nuance and complexities of financial markets. Today's episode is energy infrastructure. Will it double in the next decade? Today we have the privilege of speaking with Rob Thummel. He is a senior portfolio manager and investment committee member at Tortoise Capital. Tortoise Capital is an energy specialist with deep knowledge in the space and a number of strategies, including ETFs, mutual funds, among other vehicles. Rob, welcome to the show.
Hey, thanks for having me, Joe.
So I want to start off right away with a definition. So you have energy as a sector, and today we're really going to be focusing on energy infrastructure, which I imagine is a subset of energy. Could you, for the audience, just help define energy versus energy infrastructure and what exactly infrastructure entails?
Sure. So when you think about it, when I hear the word energy, if I wasn't doing this job for the last 30 years, what I would think is, okay, well, we need energy for the economies and the world to run, basically. But a lot of people hear energy, they think gasoline, they think diesel, they think heating their home and driving their car, and that's true. It's important for that. But energy is also important for over 9,000 consumer products as well. But specifically to energy infrastructure, this is where we delineate a little bit more. So energy infrastructure are the actual physical pipelines, basically, that transport the energy across this U.S. So the U.S. actually possesses the largest energy infrastructure network in the entire world. And that supports the U.S. because the U.S. is the largest energy producer in the entire world. So these pipelines, there's hundreds of thousands of miles of pipelines. You rarely, if ever, see them. You rarely, if ever, hear about them, but they're really, really, really important. So I think about it this way. So if you think about, if energy is the lifeblood of an economy, well, energy infrastructure is kind of like the capillaries inside your body. It's carrying all the oxygen, the nutrients to the locations where the oxygen or the nutrients are needed. In this case, it's carrying oil, gas, natural gas liquids to the areas where the oil and gas and energy products are being consumed ultimately.
Got you. Okay, great. And I'm going to keep on going with your example. So you went with capillaries. So there's not one heart in this system. There's Texas, Oklahoma, that region, which has a lot of oil. We have offshore oil. Then with the shale revolution, I think there's a lot in the Pennsylvania region. Is that accurate? Am I kind of hitting them correct? The brights, right? Okay. And
you are, Joe. You're right.
Good. I'm glad. Once in a while it happens. The infrastructure, Rob, is it both the equipment that pulls out the energy from the ground, or I imagine solar? Is it a solar system, and then it's also the pipes that carry it all the way to retail and to businesses and maybe to ships that take it, globally?
So let me. That's a good question, Joe. So let me be a little more specific on. I'll give you an examples. So you're right. So the U.S. shale technology has been probably one of the most innovative technologies, obviously in the energy sector in my 30-year career. I think it's one of the most innovative technologies, basically, in the U.S. because what's happened is because of U.S. shale. But all this new oil and gas found in areas like West Texas, as you mentioned, called the Permian Basin, and Pennsylvania, southwest Pennsylvania, it's called the Marcellus Shale. And that's allowed energy costs basically to be low for a long time. That's also allowed the U.S. to become a net energy exporter, the largest energy exporter in the world, which I think is really important as well. But none of that happens unless you have what you just described. So the energy is produced. Let's just use an example. In West Texas, way West Texas. Okay, that's not where the oil that's being produced is consumed. So it's got to somehow work its way from West Texas, 1,000, probably 800, 900 miles to the Gulf Coast of Texas to a refinery on the Gulf Coast. And so there's a pipeline, a large pipeline that basically takes that oil produced in West Texas and takes it to the refinery in the Gulf of Mexico or on the Gulf. Now, before that oil becomes actual oil, because this is important as well. This is another part of the infrastructure network. That when that oil comes out of the ground, it's not necessarily just pure oil that can be used at the refinery. There are other components of energy inside that flow of hydrocarbon coming out of that oil and gas well. There's going to be some natural gas included. There's some natural gas liquids, things like ethane and propane, not to get too specific. But you need infrastructure basically to separate all the various components of the hydrocarbon stream coming out of the ground and then transport those. So just to keep going, so you're talking about 800, 900 miles of oil. Once that oil is separated, going to the refinery then turns that oil into gasoline. Then that gasoline on the Gulf Coast goes up additional pipelines, thousands of miles up the East Coast, up to near you to supply, obviously states, 10, 11, 12, maybe 20 states along the East Coast, gasoline, and distribute those to the various, ultimately the gas stations and the end users being us as the U.S. consumer.
Okay, that's amazing. And I want to pause here. I'm always amazed, like when you start digging in a little bit. So first of all, the shale revolution, if I have it right, and please correct me, it used to be that you'd have an oil well and there'd be just a ton of oil underneath the ground and you'd drill down, straight down, and you'd extract the oil and that oil would come straight up. And then someone figured out how to drill sideways. And then someone figured out not only how to drill sideways, but basically get all the oil out of the crevices between all these rocks and all this sand. Shale's more like sand, right? And pebbles. And be able to really filter it out. And this was, I think, just an incredible innovation that probably came out of struggling with energy in the late 70s. And then on top of that, as you said, you're shooting oil all over the country. Is that right? Did I get that?
No. Now you've explained it really well, Joe. That's exactly right. So the old conventional way of drilling, like you said, just drilling straight down, and you know what happened. There were a lot of times, even in my career, where the success rate of drilling successfully under the conventional ways, you weren't always successful. And so what shale did is it really de-risk to a certain extent the oil and gas industry, because of shale technology and as you highlight now, if you think about it, from a physics perspective, you're drilling down a mile or deeper, then you're drilling sideways. It used to be just a mile sideways. Now it's up to almost 5 miles sideways in some cases. And along that route, like you said, you're hydraulic fracturing the ground. Now you remember, you're way underneath the ground, so you never see any of this stuff. But you're hydraulic fracturing and trying to open up those crevices that you were talking about to have oil and gas flow. And that is phenomenal when you think about it. And the innovation that the oil and gas industry has done has been amazing. And it's not just oil, by the way. It's natural gas. It's become even a bigger component as well. And that's actually a really important part of the story as well.
Yeah, I want to come back to natural gas. First, how is the U.S. infrastructure, like what state is it in currently?
Yeah, that's a good question. So, the U.S. shale revolution is about 20 years old. As you can imagine, there's been a lot of new infrastructure built over the last couple decades to support growing U.S. production volumes, because the U.S. has not always been the largest energy producer in the world. So there's been a lot of new pipeline infrastructure built. And I would say the state of the pipeline infrastructure in pretty good shape, and part of that is because there are regulatory requirements. PHMSA basically is a regulatory group. Pipeline, I think it's called the Pipeline Management. I can't remember the precise name of the government regulatory agency, but it's the short answer is PHMSA. Government regulation group requires that pipelines, basically in high density areas where there are a lot of people, to be tested very often and basically to make sure that there are not cracks or anything along those lines in the pipelines, to try to prevent any major accidents. Actually, there's been a lot of innovation in pipeline safety as well. With drones today, you can run a drone along your pipeline route. A lot of companies do this and have it test all the time. Is there any indication of natural gas leaking or oil leaking? And so, the innovation on the safety side has really improved as well. And so you don't hear a lot more about issues with with pipelines and leaks because of the government regulation, and just the actions that the companies have taken to try to ensure safety for not just their employees, but just for all constituents.
Yeah, and yeah, no, it's amazing just hearing about the drones. And then I know that they have the mapping that you're able to do, the topography mapping and everything is insane compared to where it was. Okay, so the infrastructure is in pretty good shape, and America's, as you mentioned, I think we're the I think also the biggest producer in the world, right? We're the biggest
That's correct,
producer,
Joe.
biggest exporter.
Yep.
Amazing. But our energy demand, if I have it right, has been flat for the last 20 years. Is that correct?
Electricity demand has.
Okay.
Broader energy consumption kind of goes up with GDP growth and population growth, so it goes up a percent or two a year. But you're right, electricity demand in the U.S. has been basically flat, really for the last 20 decades, or 20 decades, 20 years.
20 years. Okay.
Yeah.
And is that so? Okay. So you have electricity, and then energy use generally in America. It sounds like you said it's kind of growing with just the level of growth in America. So
With
1 to
GDP growth,
3% a
yeah,
year.
yeah, it tends to highly correlate with that. That's exactly right,
Okay,
Joe.
which makes sense,
Yeah.
right? You add another couple people,
Yep.
you got to pay for their energy.
Yep,
Okay.
yep.
And is that a function of efficiencies, or is it really a function of usage? Meaning, is everybody just using exactly the same amount that they used 20 years ago, and America's just kind of have a few more gadgets because we're wealthier and a few more people because we allow in about 1 million people a year legally? Is that
Yeah.
it? Or is it efficiency on top of that?
Yeah, so there have been efficiencies. So part of the reason why electricity demand has been flat, essentially at 4,000 terawatt hours for the last 2 decades, is there's been more consumption. Let me rephrase it. There's more people using electricity, I guess. To your point, there are more people, obviously, in the world in the last 2 decades. Obviously, the GDP, we've had GDP growth in the last 2 decades, which has increased the amount of demand for electricity. However, those demand increases were offset by like you're saying, efficiency. So if you think about it, what were the efficiencies in electricity generation? Well, obviously LED light bulbs, right? So that's an efficiency that reduced demand effectively. So we have more people using more LED light bulbs. That kind of offset. Same thing, with appliances. There's been a lot of energy efficient appliances come out. So there are those type of things on the energy efficiency side that basically offset the demand that was increasing because of higher population and higher GDP growth. So the net result is basically a flat line of U.S. electricity demand over the last 20 years. But as you know, that's about to change, and that's the big opportunity, frankly, in energy.
Okay, great. That's a perfect prompt to go like, all right, so what's supposed to happen now? It's the title of the podcast, right? So what's the expectation over the next decade?
Yeah,
And
so
why?
electricity, man, this is the exciting part, for me, and but I love the energy sector. But no, so we've all heard of AI, and what a lot of people think about AI, they think technology. What a lot of people don't think about is actually AI requires energy. So I like to say there is no AI without EI. So there's no AI without energy infrastructure. And the reason for that is because what AI is going to ultimately do, it is going to have to, basically the formula for AI is technology plus energy plus data centers equals AI. So obviously the technology is going to drive AI, but energy is just as important, if not even more important, because these data centers that are being constructed and operated, and we're going to need forever for the AI to work, need consistent, steady energy, and they need electricity. So electricity demand is forecasted to grow 2 or 3% a year for a prolonged period of time. You say, oh, well, that doesn't sound like much. Well, when you do the math and you think about it, that's about 1,000 terawatt hours of additional electricity demand over the next really between now and 2030. You say, well, that doesn't mean anything to me, but this might mean something to you. 1,000 terawatt hours is equivalent to the retail electricity consumption in the states of California, Texas, Florida, and New York combined, all those states. So we're going to have a lot, the U.S. is going to need a lot of electricity. And so how's that electricity going to be generated? Well, it's going to be generated using U.S. natural gas, probably nuclear as well, as well as some solar and wind. And so there's going to be a lot of development on the energy side and energy infrastructure side perspective to ensure that these data centers can operate 24 hours a day, 7 days a week, 365 days a year on it with uninterrupted power supplies. And so that's the exciting part, or one of the exciting catalysts for the energy sector. That's how it's going to support this long-term secular trend of AI.
Okay, so is AI the sole expected driver of increased use of energy?
Well, that and energy exports. So the other factor is U.S. has got a lot of energy. It's got a lot of cheap energy. The world globally is going to need more energy. The world is setting a record every year for global energy demand. Global energy demand's grown 40 out of the last 42 years. We're going to set a record this year. There'll be a new record next year. But the world also needs more U.S. energy. So the U.S. has become the largest energy exporter, and so energy exports will play a really important role too in the next several decades. So, for instance, liquefied natural gas exports. We expect liquefied natural gas exports out of the U.S. to double, basically, between now and 2030. And if you think about, what does that mean? Well, or why is that important? Well, it's because other countries in the world want a diversity of supply. Europe wants U.S. Natural gas, basically, because they no longer want to buy it from Russia. Obviously, they can't, and probably don't ever want to get into a situation again where they're so reliant on Russia. In China and India, where coal is the primary energy supply source, obviously carbon emissions are going through the roof in both of those countries. But if you take and use natural gas rather than coal, well, then it's been proven that you reduce energy emissions. Not a lot of people know, but in the U.S., energy emissions are lower today than they were 20 years ago. Why? Maybe a little bit of solar and wind, but the primary reason why why carbon emissions are lower from 20 years ago is because natural gas basically has become the predominant fuel supply source to generate electricity. It's displaced coal. Coal has come down from 50% of the market share to 20. Natural gas has gone from 20 to almost 50. And the net result is lower carbon emissions. So anyway, we're excited about that opportunity as well.
Okay, so the global story of U.S. exports is a mix between strategic diversification and some countries replacing coal with more energy efficient and better energies, I guess. So what you call it? Is that what you call natural, like the mix? That's
Yeah,
just
you
called
could just call it
energies?
a cleaner version, I guess, cleaner
Okay.
version of energy.
Okay, and then you had referenced, so the U.S. since 2005 has generally grown at a rate of GDP. What's the rest of the globe look like in terms of growth over the last 20 years?
Yeah, it's been probably about the same
Okay.
amount. Yeah, as far as energy demand grows 1 to 3% a year. Depending on the year. The only years it hasn't grown is obviously during the global financial crisis, and then of course during the COVID years, the COVID year, I guess. But besides that, like I said, 40 out of the last 42 years, global energy demand has risen.
Okay, and then the statistic I heard on AI is that it takes AI about 100 times the energy of Google to deal with the prompt. So in other words, you go into Google and you say, find me the best ice cream within a 10-block radius. And then you ask AI the same question, and AI consumes close to 100 times more energy. Do you have that? Is that right?
Yep, I know you're exactly right, Joe. And we're just at the tip of the iceberg for that, right? I think you can do these Sora. You can create a video now, or off of a Google search, or sorry, off of an AI prompt, and that's like 10,000 times amount more energy, as you can imagine. And that those are just the simple things we're doing, right? I mean, just we all know, what AI can do is well, yet to be determined, but it seems like it's going to be able to do a lot. So we're going to just need a lot more energy.
Yeah. Okay. And then so data centers, though, is not an energy infrastructure, but all the energy related support systems around the data centers are energy infrastructure. Is that accurate?
Yeah, well, so the data centers need, electricity. Electricity needs to be generated through a couple ways of doing it. Obviously, you can just the data centers can buy the electricity off the electric grid. But you're gonna need to generate more electricity in that particular region of the country. or data centers are considering and slowly starting to build their own electric generation just right outside the data center, solely to support the data center. I mean, these data centers are going to be massive, as far as energy consumption is concerned. And so, the electric generation then, obviously, to generate electricity, you need some form of energy, whether that's natural gas, which is the largest fuel supply source today. Nuclear is a big supply source. Coal is still a supply source. Renewables do generate electricity, but they don't generate electricity 24 hours a day, 7 days a week, like natural gas does. So that said, you need the pipelines. You need the pipeline infrastructure to bring the natural gas, to transport the natural gas from the oil and gas fields to the electricity generation facilities to produce the electricity that ultimately operates these data centers.
Okay, amazing. You made me think a little bit about something like it kind of happened with the exchanges. So I used to be a trader, and ultimately you had these co-locations where these entities tried to be as close to the source. The source was the New York Stock Exchange, and even a millisecond or 2 milliseconds head start allowed you to just make tons of profit. And that was because you were located right next to the exchanges, and then you had fiber optics that got you there in ultra quick speed. And there's a great Michael Lewis on it that makes it, Michael Lewis book, I can't remember the name, but I'll put it in the notes of the podcast, of just like the lengths that companies went, like Citadel and the like, to make sure that they were located in the right spot. And this sounds the same way in what you're saying, if I have it right, is they have a data center, and then that data center probably wants to be strategically placed. And then on top of that, the data center is going to put energy infrastructure right there, right next to it. And I guess one piece I missed, they're still going to have to pull the energy there, but they're going to pull the energy and really do all the refinement and everything else they need to generate right on the spot. Is that correct? Did I get that right?
That's possible. No, they could do that, because think about it. I mean, if the data center stops operating, that's the value of your AI, whether whoever you are, or your AI engine is done. It doesn't work, right? So a lot of these data centers are going to have to build in. They're going to have to build in and plan for that redundancy, right? So they're not going to just have electric generation that ensures that the data center can operate 24 hours a day, 7 days a week, just by itself. They're actually going to be able to have enough generation capacity to probably do that twice. So if one set of electricity, the system stops working, they'll be able to just go to another version, basically, and use that that redundant system
Just
to make
redundant
sure.
generators, basically?
What's it?
Is
Yeah,
that what it is?
possibly. Yeah, I think that's definitely what a lot of these new data centers are looking to do. That are obviously that are being set up by big technology companies. I mean, if you think about it's Facebook, or Meta, I guess, Amazon. Obviously NVIDIA has the chips. Google, is building a lot of these things. Microsoft, as you know, so Oracle. So these are big companies, basically, big tech companies building these big data centers that are going to require this consistent, steady energy, and there's going to be need to be backup power, because we just simply don't have the ability in the U.S. right now. The physics haven't worked to have long duration energy storage, and so that is just not possible. It's the physics don't work right now, and so until we're able to do that, you're going to just need to utilize existing infrastructure and build redundancies beyond just being able to run one system.
Got you. Okay. And so do you expect the energy mix to change? You've referenced natural gas a few times. Do these data centers care? Are they kind of agnostic in terms of the source of energy, or is it really natural gas that reigns supreme?
Well, I think what the data centers, the big tech companies are trying to do is they're ultimately trying to supply these data centers with electricity using renewable energy, but because renewable energy, wind and solar in particular, are not as reliable. What's ended up happening is the data centers, as they're being built, are actually being supplied energy by natural gas, nuclear, and other forms of energy. And then the tech companies are basically building wind farms or solar farms in other areas of the country. I think rationally, what makes sense, or the most rational solution, is just to allow natural gas to serve its purpose, which because it can provide, because natural gas by itself can provide much cleaner energy. It can provide not. I get it. It's not wind and solar. I understand that, but it's a cleaner version than coal by a long shot. So it can provide cleaner energy. It also can provide low cost energy, which is really important as well. And we have a bunch of natural gas in the U.S. So I think that natural gas will definitely, from our opinion, from our perspective, actually gain market share. And frankly, at Tortoise, we believe that the energy sector is going to be redefined over the next several decades, and natural gas is going to really take the lead, have a leadership role in that development. Nuclear will play a role too, though. I think that's important for people to understand. Nuclear has kind of been on the sidelines. It represents about it's about 19% of the U.S. electricity generation right now. We think that will grow over time as well. You've heard and probably seen several discussions about reopening old nuclear facilities that were basically shut down.
Was it Amazon? I was going to ask about that. But 3 Mile Island, is that Amazon went to like 3 Mile Island, where I think there was maybe a little bit of an accident at some point 50, 60, 70 years ago. They purchased that. They're going to put a data center there. So let's use Amazon's data center. In terms of wind, solar, natural gas, nuclear, all that has to be converted in a different way. Do you need infrastructure for each one of those to convert and utilize the energy when it finally comes into the data center? Or is that a much more simplistic process?
Well, what you need more electricity lines, right? So the electricity that's generated at the electricity plant has a much higher voltage. I'll try to simplify this real quickly. So, when you generate electricity plant, it's at a really high voltage. You have to really just basically walk that voltage down to a much lower voltage through a process effectively that to get it to the voltage level where it can come into the data center and obviously in an efficient way. And so, but yeah, as you build more and more electricity generation, you need more electricity infrastructure. You need more substations to generate electricity. You need more power lines, basically, and electricity lines. So yeah, that's an important component as well. You're right, and it's a good point. Good observation.
So you have multiple lines from all these different sources: nuclear, natural gas, etc. All these ways to get to a plant. The plant processes the energy, and then does that go through one line to our homes and everywhere else? And...
ultimately, through a series of lines. Okay. Yeah, but yeah, that's right. Okay. It's ultimately one line that comes into your house.
Yeah. So natural gas. I remember I was primarily in equities, but I did do some commodities, and then I was at Lehman, where I was just in charge of this huge derivative commodity book. But one item I remember from, I want to say 2009, 2010, 2011, was that natural gas was trading incredibly cheap, and America was running out of places to store natural gas. It didn't even know what to do with it. And is the innovation that America figured out how to effectively use natural gas within its energy mix? Is that what happened back then?
Yeah, no, it's one
of the. Is that right? Is my memory proper? Correct?
Oh yeah, there's been multiple periods of time when natural gas prices are really low. You're right, and you're right. The second statement that you made is exactly right too. We don't have. And the U.S. doesn't have a significant amount of natural gas storage. It has some, but not a lot to store vast volumes. I mean, if you think about it, where do you store natural gas? If the price is low, you just leave it in the oil and gas field. You just leave it in its natural location. That's the storage facility basically. And so you're right. So that's the thing is innovation. You find a big new supply source. The demand's not there yet, so the cost stays lower. Well, what happens is you find the natural result is you end up finding new uses of for that particular cheap cost of energy, and so that's kind of what's happened. That's probably helped. Well, definitely helped spark this big amount of increased electricity generation being fueled by natural gas. The result is, built a bunch of new power plants that utilize natural gas rather than coal to generate electricity because they're cheaper and they're more economic. Obviously, it's helped us as consumers, because we don't have to pay as much for our natural gas to heat our homes. It's helped the industrial and manufacturing area. We didn't really talk about this, but if we're going to bring back and reshore a lot of industrial and manufacturing activity, one of the reasons you can do that is because we have a lot of low-cost natural gas to basically power these industrial and manufacturing facilities across the U.S. and so make them more competitive. And so yeah, and that's. In some ways, it's a similar, it's in Europe. If you think about, why did Europe buy U.S. natural gas? Well, it's because it was much cheaper than, obviously buying natural gas in Europe. So, so anyway, yeah, there are, low prices. The solution to low prices is often low prices because that boosts demand effectively for these products.
Yeah, what I find incredible, and it's probably a luxury of where we are and when we live, is that energy drives everything. So beyond the luxurious, hey, it's cold, I'll put on the heat. It's warm, I'll put on the air conditioning. I want food, let me go to my refrigerator. Every single thing that's made, like I'm looking at a monitor to see you, that monitor required energy. It required energy to move it. So it really is incredible when you think about it. And I guess I'll add to the thesis. So on one side, it's AI that's supposed to increase energy, and then the other one is reshoring. If we really do bring manufacturing back to the U.S., which I think politically both parties actually want to do, they might have different ideas of how to do it, that itself will require more energy because all these factories will use energy. Is that right?
No, that's right. No, and you said it the best. I'll be honest, Joe. Right, energy is needed for everything. There's, like I said, 9,000, almost every consumer product. Like I said, it uses energy in some shape or form. There are things like a lot of consumer products, contain polyethylene or ethylene. You're like, well, what is that? Well, it's a derivative of a natural gas liquid, ethane and propane that are produced in the U.S. You need these energy products as building blocks. You don't hear about them because they're building blocks that ultimately result in the monitor that you're talking about, or this sheetrock that I'm looking at, or this window that I'm looking out of, or cosmetics, or whatever it may be. But but you're right. Energy is everything, and it's absolutely essential. And we do take advantage I think we take it for granted in the U.S. that because it's always there and it's always available. The reason for that is because we've got an outstanding group of innovative oil and gas producers in the U.S. that operate the energy sector. And we also have this large infrastructure network that distributes this energy very efficiently, ultimately to the end user.
Okay, great. And so I've been a little obsessed recently with nuclear. There was I believe a new nuclear submarine came online. I think it's called the Iowa, this past month. And that submarine is not supposed to ever come back for servicing. It has a 30 to 45 year lifespan. And conceptually, it could just stay underwater for 30 to 45 years because as a nuclear generator now, we need to feed people on it and there's all these other reasons it'll resurface. But how come nuclear is not a bigger component of our energy?
Well, yeah, that's a good question. Well, you're talking about enriched uranium, right? And so there's a couple reasons. That sounds scary by itself, but so first of all, we got to have enough enriched uranium. Obviously, we have a lot of oil and gas supply source. A lot of enriched uranium actually comes. We'd have to import a lot more of it. And some of that comes from Russia, frankly. Some of it comes from Canada. But we would rely on foreign supply sources to provide that enriched uranium, which obviously, when you can supply your own oil and gas, and be energy secure for that reason, that's helpful. Now, that said, the other reason why nuclear is kind of slow but gaining back in popularity is you mentioned 3 Mile Island and the accident that happened years ago. Obviously, we had Fukushima several years ago. There have been multiple accidents at these large scale nuclear facilities, but a lot of it had to do with the cooling, the issues with cooling cooling the reactors, and when there were some challenges with that, then what happened after that. So where do we sit today? Well, obviously there's been a lot of work done on bringing back new facilities that were mothballed effectively or shut down. There's gonna have to be some more work done on these large scale facilities, but I think it's possible, and I think it will happen. They can be operated safely, and I think that will happen. Now, the other thing that you're talking about though, and that's different is we were just talking about large scale nuclear. That ship you were talking about, a submarine, was what operates off what's called small modular nuclear reactors. Those are different technologies. And this is important because these small modular nuclear reactors are being worked on, and being from a research and development perspective. And I think this is going to be really interesting to see. We think it's still a decade away, but you have to. These small modular nuclear reactors are smaller in nature. And so you think, oh well, why would you use one of those? Well, they are consistent, and generating electricity. They're not as large, so maybe you can get them approved. And because nobody wants a nuclear reactor in their backyard per se, but maybe the smaller ones can find places where they can operate. However, the technology, the cooling technology behind these small modular nuclear reactors is different than what's used for large-scale nuclear reactors. Large-scale nuclear reactors use a lot of water, pressurized water. These small modular nuclear reactors are using other forms of different things to cool themselves. And so this technology needs to be tested. It needs to be approved by the Nuclear Regulatory Commission. That's just going to take some time. But I think longer term, they absolutely will be part of the mix.
Got you. Okay, so I want to summarize what I believe the thesis is and ask one final question here. So the thesis is that AI, which we're all seeing, I use it daily, continuously. One of my best friends, good old AI, tells me everything I want to hear. It tells me how to cook, tells me everything. It's great. And it's just going to get better and better. But as we discussed, AI just uses a ton of energy. It's 100x Google. Even if you think about it, there's going to be huge just demand and huge increases of usage, while that number will most likely come down from 100 to 10, right? There's going to be efficiencies, obviously, but we're going to keep on going forward. And then I'll add to it that reshoring, because we'll most likely have some level of reshoring. And so the thesis is that will double our energy needs in the next decade. And therefore, we need more energy infrastructure. Is there one area, is it just broadly, the final question here is, should we expect that energy infrastructure will broadly just grow and probably grow faster than the energy needs because you need to build it ahead of time? So this is, even if you think, okay, it's going to double in a decade, that means we have to build the energy infrastructure now. What is the mix? Are there certain areas that you believe are going to, are I guess, more valuable, where people should focus? Or is it just broadly, okay, whatever we have now, pipes, everything is just going to double?
Yeah. Well, and just to be clear, Joe, I think it'll take a little longer than just a decade to double, but it is going to continue to grow, 2 to 3% a year, probably, let's say, and that will help, will ultimately result in a doubling of energy demand consumption over time. But as far as to your question, I would agree with you. So where is that energy supply going to come from to meet the higher demand that's ultimately going to double at some point? We think that that basically the energy sector is being redefined. Natural gas will take the lead, and it will become one of the more predominant sources of energy supply. And that's because of its low cost nature, because of its lower carbon nature. And because there's a lot of it in the U.S., but natural gas will absolutely play an important role. Oil will play a role, but lesser role. I mean, oil demand growth will probably slow, but we'll still be using a lot of oil in the U.S. Wind and solar and renewables will continue to gain market share, and we believe that they will play an important role as well. Nuclear play a bigger role longer term. And then we expect coal to have a lesser role longer term, basically, as an energy supply source. So to sum it up, we still think the fossil fuels led by natural gas will play a really, really important role, grow a consistent, steady role like they have the last couple decades. They'll continue to play an important role the next couple decades. But the mix of fossil fuels will change. Lower carbon natural gas, less oil, less coal will really help. Not just from an economic perspective, but also from an emissions perspective as well.
So the infrastructure plays really around natural gas.
Yeah, that's right. That's right, Joe. So at Tortoise, what we're looking at is we're building our portfolios heavily focused on the opportunities in natural gas. And oh, by the way, the great thing about energy infrastructure is a lot of this pipeline infrastructure has already been built. So we'll need to build some new pipelines over the next decade or so. But a lot of the existing pipelines can already be utilized. And that's the one thing that we probably didn't touch upon that I think is important for everybody to understand. Existing infrastructure in the ground. So the U.S. operates the largest pipeline network in the world. The great thing about that also is almost all of these pipelines you can buy via some public security, basically, or a public fund, which is exciting from our perspective. And these pipelines have these huge economic moats that Warren Buffett likes to talk about, because you just can't replicate this asset base economically. And so this network is built to grow, and you don't necessarily need to expand it significantly to continue to support the growth that's going to happen over the next several years. So that's a great thing for the companies that operate in this industry, because they're going to generate a lot more free cash flow and turn around and pay back the shareholders in the forms of high dividends, dividend growth, stock buybacks, things along those lines.
Right. And just to be clear for the audience, it's essentially a toll road, right?
You can think about it that way. There's limited commodity price sensitivity. Yes, that's right. That's right.
Right. So, okay, awesome. Well, Rob, thank you so much for coming on the show. It's a great conversation.
Hey, thanks, Joe, for having me.
If you like what we do, rate and review the show on Apple Podcasts or Spotify. Every positive review helps new listeners find the show. Send us the debate topic you are most interested in by emailing us at podcast@fountainheadam.com. Thank you to Fedi Smooney for production, Sarah Mance for marketing, and Dalton Morrow for research. I am your host, Joe Halpern, looking forward to our next investment war.
Fountainhead sponsors the podcast to further education and critical thinking about the factors that affect markets and investing, and the podcast does not provide investment advice. Investment advice is offered only to clients of Fountainhead who have entered into an advisory agreement and with whom Fountainhead has identified individual objectives, risk tolerance, and other investment needs.